Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I'm making a recommendation this evening on crude oil, bullish on crude oil. I've been watching this for a while and think the time is about right. So let's get into it. This is a long-term chart of crude oil. This goes all the way back to 2000. You can see the blue bullish channel telling us that prices were higher. You can see the blow off top in late 2007. I remember Goldman Sachs coming out and saying they had a $240 price projection up here. If you would have looked at sentiment numbers, there would have been 99% bulls on crude oil, that it was only going to go higher. It was the perfect time to sell. So then we got into a bearish, we've been in a bearish trend channel since 2008. And every time prices get up here, the smart money would short and they would cover their short here. They short, they cover their short here. So in 2021, prices were able to break outside of this bearish channel. And ever since, it's been consolidating, which is a sign of strength. It hasn't pulled back. It's really gone sideways. So you can see in the form of a symmetrical triangle. And as we go along here, it's getting wound tighter and tighter, suggesting that when the breakout does occur, it'll probably be a very fluid movement. A couple other things I wanted to point out on the chart was the cycles. This is my simplistic cycle analysis. There's some really great cycle market technicians out there, way better than my half moon cycles, but you can see they do connect a lot of the important lows, and it's suggesting now that we're going into at least the next year or so, into an up phase in oil prices. We'll see if that holds true. It's just one check, one thing on the list that maybe has oil in its favor. So anyway, this gives you kind of context of where we are on a historic basis. And with that, let's take a closer look at this consolidation, because that's what's really important right now. And here we have it. And so prices actually were able to close slightly outside of the symmetrical triangle on Friday, but you can see that there was no really big spike in volume like you'd like to see on a breakout of a multi-year consolidation. Also, the close wasn't very dramatic. We didn't close at the high of the week. We actually pulled back into the close. And so it was really, we were on a holiday weekend, holiday week. So volume was light. And so we don't really have a lot, can't draw a lot of conclusions from last uh, last week. This is a weekly chart. Each one of these bars represents a week. But we did get a nice little down day today, which gives us an opportunity to not buy at the highs. I don't like buying. I don't like chasing. I'd rather buy on pullbacks. And so this is the weekly chart, and it's a bullish setup, and it suggests when prices do have a convincing close above this resistance line, it'll become support. Our price projection will be 148, which is, dramatically higher. Again, price projections are just landing areas. They're not set in stone that this is where prices have to go, even though many times they are pretty accurate. So let's see if we can get another angle on this. And if we look at the point and figure chart, whereas the prior chart was a more subjective chart, something that I drew, this is the least subjective chart, a point and figure chart, and it's really just pure supply and demand. Demand is when you get X's, and supply is when you get zeros or O's. And so we had a new breakout here with a new bullish trend line, which is really great. I've been waiting for that. But then we had this is called a pull. A pull is 10 X's or more in a row, and it suggests that the market's gone maybe too fast, too far, and that a pullback is likely. And so we're kind of getting that, we're down to this X. So we've given some of this luster back. It wouldn't surprise me if we get a little bit more of a down move in oil before we get our next up leg, but we're close. So I like this. I like the setup. The price projection based on the point and figure chart is 106, which maybe is more realistic. It's still, um, what is that, 23, 22, 23 points higher. So it's still going to be a significant move. I don't know if that's 30%, but it's probably close. This is one of the ETFs you can buy, OILK, and this is one that doesn't issue a K1. So if you're in a taxable account, this might be something that you could purchase to participate in crude oil. USO is another very popular oil ETF, and that does give you a K1. So if you're in an IRA or something, you may use USO. Anyway, I just thought I would throw that in to give you an investment vehicle if you wanted to participate. Couple downside to crude oil right now is that from seasonality, you can see it peaks right now. So, uh, maybe it continues another month or whatever, but it's not really in our favor at this point, but I just wanted to have transparency here, and you're never going to get all the boxes on your list checked. You're never going to have everything line up, the stars align to all those things. So this is one thing that may be slightly against us. At least it's not November. This is in our favor. So this is really important. This is the Commitment of Traders report, which is issued every Friday, gives us a report that breaks down the futures markets, which really drives prices into three groups. Commercials are the deep pocket people in the industry. So this is the Exxons, the Chevrons, the big money people that can actually drive markets, and usually the smart money. And then you have the trend followers, and those are the hedge funds, which they'll get on a trend once it gets going, and then they'll stay on it forever, but they usually get the tops and the bottoms wrong. And last but not least, you have the non-reportables, which are the small-time traders who are usually on the wrong side. But the commercials, the smart money, is down at a really low short position. They're always short to some degree because they're hedging their products. But the least short that the lesser short they are, the more bullish that scenario is. And you can see we're at a pretty low level right here. This was a couple of weeks ago, so I couldn't get it updated. This is from Tom McClellan. So shout out to Tom. I thought I could get an updated one this evening, but I wasn't able to. So, but we're in good shape with this. So, copper, on the other hand, is way up here, which where the smart money is really short. Gold is kind of the same thing. So, this is a good scenario with crude oil there. Uh, but the other part of this equation is not just crude oil, it's also energy stocks. And Marathon Oil is one that I've been bullish on since March. And we've been on the right side of this. It's done well. Marathon Oil got bought out by ConocoPhillips, and it shot up, I don't know, I think it was like 15% in a week. This is a weekly chart, and it gave some of that back, and it's giving you a chance to buy this again. So the price projection here is 41.50, and we're at 28. Our stop is down here at 25, so the reward to risk is really favorable. I like this a lot. A new name, Devon Energy. This looks great. It's Marathon Oil is a mid-sized company, and it was bought out. So Devon Energy, also a mid-sized company, people started buying that, saying, "Oh, somebody's going to buy this next." I do expect a lot of consolidation in the energy space, and Devon possibly could be a target. But the descending triangle here, the breakout, gives you a price projection of 77, which is a long way up. And oh, by the way, this pays a 5.95 dividend yield. I had to check that twice to make sure it was accurate. At least that's what Google is saying. So, the total return on this could be really astronomical, and I like this a lot. I've been buying this in small increments. And so let me go back. So this is the weekly chart. Each one of these bars is a week. And so this pattern, a 2-year pattern, is really, really good size. So it's really attractive. But we're going to look at, so when do we get into this thing? So let's take a look at this part here. And you can see the correction. And you can see today we had a bullish doji uh, hammer, which is very bullish. So, prices gapped down a little bit and then intraday sold way off. I think the stock was down maybe 4% intraday and then closed back at the high of the day. It shows you that there were buyers in there at that level. So I like that. So this is one that I would be buying. I think the timing is pretty good. And the point and figure chart is giving us an 80 price projection. So on my chart, we have 77. On the point and figure, we have 80. That's a huge upside. And we got a new bullish trend line. We had a pull here telling us that we were overbought. Now we got this pullback. I think it's a good opportunity. If you want one of the majors, one of the big oil companies, quality is always going to be better in these situations. You got Chevron, and Chevron is still in the consolidation. Like many, many, many of these energy stocks, they haven't broken out yet. They're still in the consolidations, but I still think it's okay to look at a Chevron. And with that, thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. I'm bullish on crude oil and energy stocks. Thank you for watching. Great trading tomorrow. Sleep well.